So I wasn't planning on doing this video today, but I thought, you know what, I'm going to cover B&M stock and why I like B&M stock at the moment for you guys on the YouTube channel. So I hope you enjoyed the video, guys. Let's get started. So today I thought I'd do a video for you guys because B&M stock in the last couple of days has had a real tough time. The stock is down nearly 10% in the last 5 days. And this is quite a strange reaction because they actually brought their interim results out. The stock market reacted really positively to the results and the stock was up 5% on these results. But since then, at the highs of the results, the stock has then given away all of the gains and actually gone down 13%. And I thought, you know what, I'm going to talk about this, and I'm also going to talk about this opportunity that I actually like myself, and I am actually actively buying B&M stock at the moment. Now, I did do a earnings review of B&M's interim results on the Patreon a couple of days ago, and then after doing that earnings review, I thought, okay, I'm actually going to do a full video on the YouTube channel. Since then, I have done an earnings review on Shopify, Alibaba, Topgolf, and dLocal on the Patreon for you guys. And by the way, while it is going on, I'll just mention the Black Friday sale is currently going on for the Patreon. It doesn't give you access to the Patreon, it gives you access to the Discord, which you can get all the same posts on the Discord as the Patreon. I just can't do it through Patreon because they don't allow sales on their products. So yeah, I have to do it through the Discord and through PayPal. But you get all the things that you do get on Patreon, the exclusive videos of 100 exclusive videos, the JKR community to talk to, and me as well, and what I'm buying and selling in real time. And it's only £44 for the year. It works out as £3.40 a month, I believe it is. Yeah, it's a very good offer in my opinion, and I think there's over 30 of you that have signed up for that already, so thank you for you guys that have signed up to that. I'll be running the Black Friday sale until the 1st of December, and then it will be gone. Anyway, getting on to today's stock, obviously B&M. I'm sure most of you guys know the retailer B&M if you're watching this from the UK. Obviously, yeah, a bit of a bargains supermarket store, and a lot of products that you have in there, you know, the food that you have in there. There's also like furniture options as well in there, a good variety of products. Now, getting on to the stock itself, you know, big fall off in the last week, and to be fair, year to date, it's down 38%. The stock really peaked in back end of 2023, fallen massively since that time frame. And it's been up and down quite a bit. If you do look at the stock, you had the COVID drop here, bit of a big rally up through 2021, dropped again after the concerns of the economy, Liz Truss coming in, rallied out again. You know, a lot of people were looking for a lot of bargains during that inflationary period, and they did really well. And then it's fallen back down again. So it's kind of like back at these kind of levels that it was at in the COVID lows, and it's very close to where it was in 2022, which is a sign to me that this is getting to attractive value. Now, obviously, a stock price going down doesn't mean a stock is good value, but it's a good marker for me that, I look at these periods of time where there was a lot of fear at those times, and the fact that it's level with them sort of times is kind of pointing to me that it's maybe a starting of an opportunity here, especially when you look at the past performance. This is a company that's executed really well on the UK market. Really good amounts of profit growth, really good amounts of revenue growth. If we look from when we did have the the coronavirus situation, we were around about 3.8 billion in revenue, and now we're at 5.5 billion in revenue. And from a profit point of view, we're around about we're up to 326 million profit. So the company has executed massively in the last few years, and since these lows, the company is doing a lot better from a revenue and profit point of view. 10 times earnings, obviously quite a low multiple here, and we'll talk about that in a second a little bit more. And also a 4.3% dividend yield, so you also get a nice chunky dividend from here. Now, I did cover B&M for the first time around about a month ago, as you can see here, and I said on that video, I like B&M. I'm going to do a starter position, and I'm going to hope the stock drops 10-20% more, just the risk to rewards a little bit bigger on the reward side then, and I'll keep buying as the stock goes lower. Now, obviously, since I made that video, the stock has gone lower since that time frame, so for me, I am now actively starting to build up that position into B&M right now, and I thought I'd tell you the reasons why and also show you a few things that are currently going on with the stock right now. So like I said, really good track record of past performance, revenue and profit growth. Normally, this has been a company that does trade at the likes of 20 times earnings, and right now you're getting it down at 10 times earnings, 9 times earnings on a forward PE basis. So first indication that this stock is maybe a little bit lower than where it should be. You look at the likes of Marks and Spencer's, for example, that's around about 15 times earnings. So yeah, B&M is historically trading a lot cheaper than what it normally does, and when you look at competitors, it's a lot cheaper as well, and this is a company that has had very good execution in the last couple of years. The other thing that I do like about this company as well that's worth pointing out is that we do get a good dividend. Obviously, you're going to get a nice final dividend, you're going to get a nice interim dividend, but sometimes they also do pay special dividends as well, and it sounds like they are going to do another special dividend. If they do I think it's a 20p special dividend this time round. We'll see if they do a 20p special dividend. It might be a little bit less than that, but that would actually put the dividend yield up to 10% then, which is obviously really attractive if we see that happen, but we'll see what happens with the special dividend. They did bring out their interim results, and you know, you'd look at the share price reaction the last few days and you'd go, oh, it's because of the interim results that came out. And I'd argue the case, it's not. You know, it's not. I looked at the results and I actually thought they were really good. They were a step in the right direction. Q1 was a little bit weaker, but it looks like they've got the groove back, and also we're heading into the Christmas period, which is the best time as well, which hopefully goes really well from them. And look at the numbers that they did in the interim results. The revenue was actually 3.7%, and actually, if you look at the B&M's total sales growth in the Q2, it was actually up 6%. That was up from 1.5% in Q1. So when you look at the sales at the moment, the sales started off pretty strong, pretty weak at the start of the year, and now we're seeing really good speed up in the growth going into Q2, and obviously more importantly into Q3 and 4 when you start entering your peak Christmas season as well, or what they call is the golden quarter. So this is what I really like. You know, a bit of a weak start, but everything's moving back in the right direction, which is obviously really good to see. Opening up more stores, opening up some more locations in France, and also an owner of Herring Foods, which is like a northern supermarket. They said their operating profit was pretty close to where it was in H1, just slightly down. They put that down to a little bit of working capital. They were also ordering a bit of stock a little bit earlier for the last half of the season, because they didn't want any disruption in the back end of the year, as you can see here with the free cash flow that they posted here. So hopefully that is all okay. And I was listening to the CEO during the webcast, which you can go listen to online, and he sounded really optimistic. I was listening to what he was saying. He said that, look, everything's going really well here. He said when they got talked about guidance, they reaffirmed the guidance. They didn't change the guidance at all. You know, you'd think maybe the stock's going down 10% because of, you know, decreased the guidance slightly. There was none of that going on. And actually, when I was listening to the CEO during this time frame, he was actually saying like comments that were on the lines of, you guys know me, I don't aim for the lower end of my guidance, I aim for the higher end of the guidance. And he sounded really optimistic about where the business is. Now, obviously, as a CEO, you know, you got to take it with a bit of pinch of salt. He's there to kind of protect the share price, he's there to sell the business. So he's going to be optimistic around the stock. But there were multiple times where he was saying, I'm aiming for the top end of the guidance. And obviously, when you look at the top end of the guidance, and if that does get to a 9 times earnings, you're also going to be picking up a 4% dividend yield without factoring the special dividend in that we said. And this stock is obviously half the earnings that it usually trades at, and it's 50% cheaper than some of the competitors that are out there. You start thinking, well, what are we kind of missing here? And that's what I've been looking at in the last kind of couple of weeks, and this week in particular, is I've looked at the stock and I've gone, this is an awful downtrend. Like, why is the stock going down this much? And I generally don't know. You know, I originally kind of put it to the budget, and I looked at the budget and I thought, well, that was, October time, and by then the stock was already down 25%. And then the stock's only continued to fall. And maybe we can put that down to the budget. We could put that down to the budget that maybe, you know, that B&M are an employer of a high number of people, and because they're an employer of a high number of people, maybe they have an impact, and maybe the market's kind of factoring in with a lot of other stocks and going, you know, we're going to sell you off because you might be impacted by the NI. But realistically, like, B&M has actually been going down for like a relatively longer time frame. It's had a pretty awful, 2024. Even before the budget happened, the stock was already down a good 20-30% during that time frame. And the reason why is I don't know. Maybe the market was just spooked off the Q1 update, as you can see here. Maybe it's the combination of what was a poor Q1 update, and then it was the budget that's maybe sent it a little bit lower. But like I said, when I looked at the recent interim results that came out, they look okay. They reaffirmed the guidance on the revenue and profitability point of view. We can see numbers are starting to tick up, in the right direction. And I look at B&M, and I look at, when I go back to the video that I did about a month ago, and I look at the game plan, it looks pretty clear. You look at the B&M stores, and they're looking to get to 1,200 B&M stores in the UK, which would be double what they currently have right now. You look at France. The B&M has started launching in France, and they're trying to open up a lot of locations there, and that could potentially be a growth driver for not just like the next 2 or 3 years. You're talking 6-7 years at the time. And then obviously you got a little Herring Foods as well on top of the business there. And I'm thinking, you look at the clear path here, that it's not near saturation. There's some companies that I look at and I get worried about how much growth plans, how much growth do they have further forward? And I look at B&M and I think it's nice and simple. All they need to do is carry on increasing those like-for-like stores a little bit, which granted was negative, but it was improving in the right direction. And then they just need to keep opening up a couple more stores in the UK, and we're going to have exactly a copy and paste of where we were at a few years ago. I guess the only thing that maybe works against the stock is that it does have a little bit of an ugly balance sheet, but the management team are happy with that. It does have quite a bit of debt on there, but they do have 185 million in cash. They are a pretty decent profitable company. They do make nearly 352 million of profit a year. The profit margins are pretty decent. You compare it to Tesco that struggle with like a 1% profit margin. With B&M, you're up there at 5-6%, 7% profit margins, which is pretty healthy as well. So there's not like an issue around the profit margin here. And yeah, I like it. It's a good opportunity. I look at the risk with the stock and I think, I really like the reward potentially with the valuation, the dividend and the expansion plans I have. The only thing I would like to see is, obviously the comments around the CEO were very optimistic about, we aim for the higher end of the guidance. I thought, well, if you're at the higher end of your guidance and your stock's back down at the levels it was at, nearly during the COVID dip and obviously the Liz Truss dip, it's only 12% up from that time frame. It's trading at historic lower valuations than what it's normally done, and you seem optimistic. Why don't you go buy some shares? And that's the only big criticism that I have is like, if I were these guys, I'd show a bit of confidence to the shareholders now and I'd come in with some buys. Obviously I can't tell people how to spend their money, but I personally would do that to, do a bit of confidence for the market. But apart from that, I think it looks a really, good opportunity. And I was running some numbers a little bit earlier on B&M, and the last time I run the numbers here was £4, and obviously it's fallen a little bit since then. And I looked at the new numbers. I haven't changed the revenue growth at all. I moved the profit margins around slightly, and I put it at 15 times earnings. Like I said, this company normally trades at like 19, 20 times earnings. I think it should at least be level with something like Marks and Spencer's at 15 times earnings. And yeah, I was looking at the numbers earlier, and the upside, on the low side, 41% upside. I said this to you before, guys, even if they grow at 3%, which obviously I don't think they're going to grow at 3%, profit margins contract. Right now they're at a 5.8% profit margin. They'd have to contract a fair amount at 15 times earnings, and I'm still getting 41% upside on the low side. I like that. I like that when the numbers, I put weak numbers, numbers that are slower growth than what they've done, profit margins declining, and yet they're still upside. That's what I really like. So that makes me a lot more, really confident. Mid-side, 5% growth, 6% profit margins, what they do right now. I think this is really achievable. 82% upside. And if they are able to just go on that high side with 7% revenue growth, 15 times earnings, and drag that profit margin up a little bit as they scale up their operations, we're getting the 100% and 30% upside there. But even on the 82% upside, you got to remember, let's say you get 82% upside. I think these middle numbers are definitely, base case. I think these are achievable. This is what I would expect them at least to do. And, at 82%, I've also got to factor in I'm going to get a 4.3% dividend yield. That's 16% on top if we go over 5 years. Once again, as well, that's not including that B&M have a history of paying special dividends, and whatever that special dividends could be, whether it's 20p, 15p, 10p that they've done historically, actually that dividend yield could actually be 6, 7, 8%. So if we get 5 years at 6% dividend yield, let's just call it 30% from dividends, and then we have the numbers on top. You're at 110% upside from there. Even on these numbers, you're at 160% upside from there. So I look at the risk to reward here and I think, I really like B&M and I'm buying it at these sort of levels. And I'm not going to lie, if it can go a little bit cheaper, that would be great. And I will, carry on buying some shares. Right now I'm in the process of doubling my position up. I'm about halfway there. And then if it does drop another 10% from here, I'll double the position again. So yeah, if it keeps going lower, I'll keep buying this one because I think it looks really interesting from a value point of view, a growth point of view, and you obviously got the dividend as well. So yeah, when I'm looking at the stock and I can't really pinpoint the exact reason why it's on free fall, that's okay. I'll buy the stock here because I don't think it relatively, deserves to be down. Obviously, there's the concerns around the NI increase, but, so many companies have that right now. Maybe the balance sheet, but I don't think that's much of an issue. Maybe you look at the week Q1 update, but, their interim results were good, in my opinion, and even the market seemed to react to it positively until it decided to, give it all back. it just looks like the market's just having one of those, funny moments. It happens a lot in the UK market. It happens a lot where you just look at things and you just go, that doesn't make sense why that's falling, or that doesn't make sense why it's that low. And I think that might be it with B&M right now. So yeah, I do like this one. Hope you enjoyed the video. Anyway, guys, it's been a while since I've done like one deep dive on a stock. Sometimes these videos don't do that well, even though I feel like these are the best videos and I give the most information on them and they take the longest to put it together and edit it together. They always don't do that well. So we'll see how we do anyway. So if you did like it, make sure you like it and share it about anyway. Thanks for watching, guys. See you in a bit.